All right. Hello again. How's everybody? Hope you're doing great. Welcome again to yet another webinar hosted by FX Educast and myself, Munther, Marji, CMT. How's everybody today? I hope you are having a fantastic day in the market, first of all, and a fantastic day overall. Today we are going to continue doing the same thing that we did yesterday, and that is, of course, analyzing the market together in a live session of analysis and trading. Of course, this free webinar is sponsored by QTimeFX. Thank you very much for QTimeFX for this sponsorship. We are offering you guys a fantastic bonus of $500. And of course, you can trade with our broker with excellent and very attractive spreads that will make it easy for you to take advantage of the smallest moves in the market. And of course, zero commission. You know, some brokers, they say, yeah, we have low spread, but we have commission. So here, no, it's not like that. Low spread and zero commission. So show some love to our beloved QTimeFX, and let's start today. Okay, guys, immediately we're going to move to analysis. Sorry about that. Analysis and trading. First of all, first thing that we need to is to review what happened yesterday. We had 3 signals, and all of them reached profit during the last 24 hours. The signals are on the top of the screen. To remind you, you were long from 1050. We had our stop at 980. Of course, we did not even come close to this at all. Now the euro is doing very well. And we reached even better profit overnight, but of course I didn't want to touch anything. I didn't want to close anything unless you are here, guys. So I did not do anything after the end of yesterday's session. The second signal we had yesterday was a long at the dollar yen at 108.75 with a stop at 108.05 and the limit at 10.70. This signal has been jumping into the profit zone and into the loss zone for the past 24 hours. Just a little bit of profit, a little bit of loss, not a lot of change. As you can see on the screen, the highest price on the dollar yen today is 108.83 and the lowest is 108.64. So it's only a few pips of profit and loss for this signal. Currently, as you can see, it is almost at zero. You know, it's almost exactly where we opened it. But for the euro, we are in a profit of more than $400, and it reached more than $600 yesterday. But as I told you, I didn't want to close anything unless you were here with me. And we also had a third signal, another buy on the dollar Canadian at 32.20 with a stop at 31.60 and a limit at 32.77. Also, the signal changed from profit zone to loss zone several times in the past 24 hours without reaching significant profit or significant loss during this period of time. So for today, the first thing that I'm gonna do, I don't know if you like this or not, but the first thing, or before I tell you what I'm gonna do for today, we had an order to sell the euro yen at 1954, but the market never reached this level because it kept on trading above the support that we talked about yesterday. We did not drop to 1954, and that is why this order is not triggered. And you see this thing shows us the difference between view and trigger. It's an idea that I've been talking about for the past few days. If you have a view of the market, that is great, but tell me, where is your trigger? This is very important. For me, I had a view that we may, of course, this is just something regarding this specific pair. You know, I expected the euro to go up against the dollar, but I said to myself, well, if the euro yen breaks the support, then the euro will go down against the yen, not up. And of course, it can happen. Usually, these major currencies, they move in the same direction against other majors, but it's not the case 100% of the time, of course. Maybe we'll have some news coming out of Japan, some good news that will push the euro lower against the yen, because the yen is going to appreciate in that case, while of course not affecting the euro dollar, and the euro dollar can go up, the euro yen can go down. Usually, as I said, the major currencies, they move in the same direction against other majors, but it's not the case all the time. Sometimes you can see the euro dollar going up and the euro yen going down. It can happen, of course. So that is why I had a long on the euro dollar and a short on the euro yen. But the market proved that the euro is not going down against either of them, against the dollar or the yen. And that's why our order here was not hit. The first thing I'm going to do for today is to delete this order. We are obviously extremely far from 1954, almost 85 pips above this level. So there is no point in this order. And now what I want to do is close these trades. I don't know where I'm getting this, guys. Let me just restart my trading platform. Okay, here we go again. I need to close these trades. But obviously there's something not going well here. Let me check. Okay, we'll sort this problem in a minute. For the time being, I need to Okay, guys, then today we're going to continue analyzing the market. And the first pair that I want to take a look at is the euro. As you can see, the euro is still giving us signs of an uptrend. The first sign, or one of the main signs, was touching a rising trend line for 3 times in a row. And we had also the retracement levels touched, finding support at retracement levels, something that you can find happening in an uptrend. I think this was the 50% level. No, it was the 61.8. Yes. Here we came very close to this level, and again here we came extremely close to the 50% level. Just look at these two retracement moves. First we go up, and then we drop to a key retracement level, the 50% in this case, and then we move higher to a new high. It happened again here. This is the first time. And again here, we moved up, we dropped very close to the 61.8 level, and then reached a new high. Now we have a sequence of higher highs and higher lows. As you can see, this is a low, higher low, higher low, and here a high, higher high, and higher high. This is the definition of an uptrend. You know, I have been bullish on the euro for a long time, and honestly, before the rate cut on July 31st, things were not very good if you were betting against the dollar. But after that, my positions on the euro and gold, especially gold, produced very good results. So I have been expecting the euro to go higher for a while, and this took a longer time than I have expected, but eventually the market is currently moving in the direction expected. And that is why we had this position here on the euro yesterday. And now we can close our positions. I'm going to close all of the positions, the winners and the losers and everything. I know it is not and delete my order as well. I know it's not a lot of profit, $190. That is not a lot of money. It's okay, but it's, you know, we are hoping to do better than that today. So we're going to start all over again from zero today after achieving this small profit here. Now let's see what can we do. Now the euro is still moving higher. We have a break above October 11th. I think that was Friday's high. Yeah, Friday's high. We dropped in a 3-wave, and please allow me to show you this. This is the kind of correction that when I see happening, I rush to jump on the long side of the market. 3 waves, if you know your Elliott waves, you know that 3s are corrective. And if this happens, if the 3 waves to the downside, let's say, stop at a rising trend line like this or at a retracement level, usually that produces a very attractive and very good position. And as you can see, after touching the trend line and after 3 waves or legs to the downside, we started moving higher, and we broke above Friday's high, which was a 3-week high. Now we are at 1-month high. Okay, guys, these prices in the 1080s have not appeared on our price screen since September 13th or 15th. Okay, so what we have here is a 1-month high. This indeed further confirms that the euro is expected to continue moving higher. And the one thing that I keep looking at is this chart. You know, this is the long-term chart. This is a weekly chart. Let me show you what happened in the past few years. After a very sharp drop, that started in 2014 and continued until 2015. We spent some time just moving up and down, and then in 2017 a great move to the upside started, and after 5 waves to the upside we started correcting lower. Now this correction is probably, let me say probably, done. Why am I saying that? Because we have a long-term wedge formation, a bullish wedge formation. Up until now, let me call it a potential wedge formation. This is the formation, the pattern that I have been following for months now. For the past few months, I have been waiting for this, hoping and praying that we break this wedge to the upside, because that will generate a fantastic trading opportunity with a target of more than 1,000 pips to the upside. Of course, I still call it a potential because I need to see the price breaking above the upper limit of this formation. If we don't do that, then it is only a potential pattern. A pattern is completed when it is broken in the direction expected by the pattern itself. And when a wedge is pointing to the downside, that is a bullish wedge, and the expected break is, of course, to the upside. Another fact that supports that the euro is really going to achieve some gains here, or let's say it gives me hope. This fact is, up until now, of course the week is not closed yet, but up until now we are witnessing the third green candle on the weekly chart, and this is happening for the first time in a while. If you go back all this way up until here, we have not seen that happening. Okay, so we were in a downtrend. Of course, we are still in a downtrend. We need a break to confirm that the downtrend is over with. But for now, no, we still don't have that break. So yes, we are bullish, but we need to see a break. I really need to see a break to the upside, or else. If you go back to the daily chart, you can see that the top of the wedge formation is still a little bit far. Okay, we are still talking about levels around 112, but this trend line is a falling trend line, and it will continue getting lower and lower with time. In my opinion, we have an important resistance here in the 1160s, and if we break this level here, this top, that would give more hope to the bulls in order to test and maybe break above the top of the wedge formation. There is another way to draw this wedge, and it is this one. Hi Faisal, hi Aaron, hi Georgios. Hi Aaron, yeah, 382 points, yeah, that is great, man. Congratulations on this profit. Yeah, we were long on euro, and I'm very happy. I'll be very happy to see anybody of you guys make money on that long position. Congrats, buddy. Yeah, great news. I love hearing that. I love hearing that. Congratulations. Enjoy the money. There's another way to draw this wedge, and it is starting at this point, and of course you can stretch this line to touch an important support around here. So that's a larger wedge formation than the one I have shown you before, and this, if we draw it this way, the top of the wedge formation is now very close to August 26th daily high, which I think is going to be important in determining if the bulls can do something this time, or if it's going to be the same old. Every time the bulls tried to recover in the past, year, or maybe more than a year, they got a hit on the head and they were pushed to the downside every time, here. Every time they try to recover, they give up. So can this time be different? Of course it can. But what do we need in order to believe that this time is going to be different? We need a break. We need a break of 1146. Yes, I need to break above this level in the near future, and that of course will leave me face to face with the top of the wedge formation. We still need like a couple of weeks in order to make these two levels meet. They meet early next month, so it is 2 weeks to 20 days, something like that, before they reach the same level. For now, I have reasons to believe that a break above this level, or it can be an area we can stretch it up to the 80, from 1164 to 1180, 75 to 80. So it's about 15 pips of resistance expected here. Yes. And if we break above this area, I think testing the top of the wedge will become extremely probable. One very good thing that happened recently for the bulls is breaking above the falling trend line from June 25th high. That is that this trend line has been keeping the euro down for 4 months, 3 months to 4 months, and we broke above it, and we then dropped to touch the trend line again, and then we started rising again. Everything that you can see here is bullish, but you never know. So yes, we are bullish, but of course we need to implement sound risk management techniques. So for now, if we want to go even more under the microscope to hourly and intraday charts, where can we buy the euro again? Well, I have two options. If the euro, let me draw this trend line, this beautiful trend line, and let me use the retracement levels for the last part of this move. This is getting better. As you can see, we have an obvious support around 1025. Why is that? 1025 is the Fibonacci 61.8 retracement level for the last leg to the upside, which started a couple of days ago on Tuesday. On Tuesday, we were trading just a little bit below the $1.10 landmark, and from there we started recovering in a very beautiful way. Now, if you think that touching the same level twice is a weakness sign, then you are a good analyst. So at the hourly chart, we tried to break the 80s. We got a little bit lower, and we tried to break the 80s again, and we failed. Okay, now if we break below this, the lowest price between these two tops, let me call them, then this confirms the weakness, and we can expect a modest drop, of course. I don't think it's going to be huge. It's going to find support. This is what I think. This is what I believe. It's going to find support at one of the retracement levels for the last leg to the upside. 1025 is very important now. Why is that? First of all, because it's a 61.8 Fibonacci level, and at the time being, it is only pips above the rising trend line from October 1st bottom. So we really need to keep 1025 alive. We don't want to break this support to the downside in any way, because if that happens, that is a weakness sign, and we do not want to see weakness signs around these levels, because that could be devastating for the euro. I just said that it happened again and again and again, that the euro is trying to recover, but then nothing happens, and downtrend is resumed. We don't want this to happen this time. I want the euro to keep moving higher. So 10.25 is very important support for today. A closer level is 10.37. Of course, we're talking about pips, as you can see. We're not talking about a drop of 100 pips or something like that. If we break 63, then a drop towards the 30s or the 20s should be expected, and from there it will become good to buy again. This is my own opinion. Another option, if we did not drop enough to reach one of these two levels, the 50% level at 10.37, the 61.8 level at 10.25, if we did not drop enough to reach one of these two levels, then another way of justifying a long position is by trading above these two tops here, and these two tops are around 10.85, 10.86. Okay, so once we start trading above here, we should, honestly, if we start challenging 10.85, in my opinion, that's enough, and we can jump in on the long side of the market. So here's what we are going to do today with the euro. If the euro drops to the 30s or the 20s, we buy. If the euro breaks above, or at least attempts to break above 10.85, we will buy. How can we translate that into orders? Let me show you. I'm going to place two orders, a buy limit and a buy stop. Although I really think 10.25 is very important, I'm not going to wait that much. I will place my long at 10.37. Okay, for now, we have just made up our mind on the entry levels. We're going to talk about the limit and the stop in a minute. So this is it. Actually, I'm going to put it at 83. Why is that? Because we have a resistance at 83. It's the 88.6 short-term Fibonacci or micro-term Fibonacci retracement level. And if we have challenged this level twice, if we go up towards this level a third time, I don't think it's going to survive. So if we drop to 37, I'm going to buy. If we go higher to 83, I'm going to buy. In both cases, these two levels are good to buy for the euro. And of course, I'm hoping for a drop to get a better price, but of course, that may or may not happen. If it happens, that's great. If it does not happen, we should buy when the price is trying to break above the 88.6 Fibonacci retracement level at 10.83. Now, of course, we cannot leave our orders like this without a stop and a limit. So let's go back to the chart. Where is your stop, Munther? Well, for the first position, if we drop, a break below this trend line could be harmful for our long position. So we don't want to be in the position a long time after this break. We may, of course, we need to be flexible. If we drop 10 or 5 pips below, that's okay. It happened here yesterday, and we resumed rising to the upside. But I'm talking about a clear and clean break. Okay, if we have a clear and clean break below this trend line, we should not keep our long position. Again, guys, always, no matter how confident you are of any analysis, your analysis or the analysis of a professional trader helping you, an analyst, a trade advisor, a website, anything. No matter how confident you are in your analysis or the analysis you are using from another source, you should always have a point where you admit that you are wrong. So I'm bullish on the euro, but can I be wrong? Of course I can be wrong. When will I admit that I am wrong? if you break below this trend line is currently at 12. Of course, it's a rising trend line. With time, it should get closer and closer to 25-hour support. Now, a few pips below it is not something that we find harmful to our position, but if we drop with a good number of pips below this trend line, then I don't think we should keep this position. One of the levels that we can count on is the Fibonacci 61.8, which is at 109.56. Now let me see if this is good enough. Well, 109.56. This is how we think. We replace the stop, let's say 20 pips below that at 109.36. Is that good for me? Is that good for my account? Is this the kind of risk I am willing to take? 100 pips on a 2 lots position. Well, that means 2,000. My account is around 35. 2,000 by 2, 4,004. That is more than 10% of my account. Sorry, more than 5% of my account. So 5% is acceptable. In my own opinion, I accept a loss of 5%, but that is the max that I expect. I usually try to place my stop at 2% of my account. 2, 3, and 5 are all acceptable numbers for me, but most of the time I prefer not to reach the 5%. That's why I'm going to try and find a closer stop. Let's say this 25, yeah, our support. 20 pips below that is 10.05. 10.05 is very close to the Fibonacci, or actually it is exactly the Fibonacci 38.2, so I cannot place my stop on a support. How about we take that 10 or maybe 12 pips below this support? 12 pips below that means 93. Now that is better. That is absolutely better. 109.93. That is much better. It's a small stop. It is only 1% of the account. That is much better than 109.36. Don't you agree? Don't you think so, guys? Thank you, Aaron. Thank you for your very kind words. I'm very happy you guys bought the euro yesterday. Everybody, Borania, I'm very, very happy you guys followed the signals yesterday. Hi, Oliver. Hi, everybody. And it's a pleasure having you here. So, we have a stop for this trade at 109.93. Now, where is the limit? We have said earlier, I think I have made a case why 1164 is an important resistance, and that is why I will place it here. But then again, this is far for day trading. If you are taking a position that you expect to hold for a week or so, yeah, that sounds like a reasonable target. But for day trading, of course, we're going to meet again tomorrow, and I'm going to talk about what happened to these trades. So maybe using a smaller target would be better for this session. So I'm going to look at a smaller target. The target from yesterday, we justified having 1109 as a target, if you remember. And I'm going to use this target. Yeah, this is better now. Now, what about my other long position? My other long position. If I buy at the break of this resistance, I cannot wait. Of course, if I buy here, I cannot wait and place my stop here. That would be a huge stop. That would be 6, 7, 8% of my account. I don't want to pay that much on one trade, on any one trade at all. Okay, so what I want to do is I want to find support that I can count on that is closer to that. 25, we talked about 25 as a support. Maybe if we drop just a little bit below 25, that would be enough for us to give up our position at 1083, and that is, let's say, 10 pips below it, so 1015. It all depends. As you can see, guys, we are long from two different levels, but the stop and limit are not the same. Why is that? You say, well, that's a very good question. If the technical analysis is pointing in this direction, why are we having two stop levels or two different limit levels for two positions on the same currency? Well, that is because risk management is very important. Even if the technical analysis points to a stop that will cost you 9% or 11% or 12% of your account, you should not place your stop there. You should not risk that much on any one trade at all. This is a rule. You don't negotiate with rules. If you go into the market thinking it's okay to place stops at 12% of your account, that means you need a very small number of losers, of losing trades. I mean, when I say losers, I mean losing trades, not losing people. A small number of losers in order to slash your account in half. Do you want that to happen to you? Everybody has a bad day, a bad week. Everybody, even professionals, even the most successful people in the world, they have good days and bad, good weeks and bad. So what if a bad week strikes us with 4, 5, or 6 losing trades in a row? Do you want to have your account slashed in half after that week? I know I don't. That's why how I do things is that I always try to keep each stop at 1, 2, 3% of my account. Sometimes I can push that towards the 5%, but even the 5% is not the habit for me. I always try to make it between 2 and 3%. And this, if you use this idea in your risk management, then you will come to realize that even after a bad week, even after 5 or 6 bad trades in a row, you're going to be losing what, 10% to 15% of your account, and that's it. And how many times have you traded and lost 5 or 6 or 7 times in a row? That's a very rare thing to happen. Of course, you're going to make money on one trade, then lose money on another trade, then make money, and so on. But it's very rare to have 6 or 7 or 8 trades that are losers in a row. And even if this happens when you are keeping your stop at 2% of your account, that will not destroy your account. But if you are using stops of 10 or 12% of your account per trade, and this bad week is here, then at the end of this week, you are going to be extremely devastated. You're going to see that your account is slashed in half, maybe. And getting to recover from that is extremely hard, not from a trading point of view, but from a psychological point of view. You find yourself, well, I was at $10,800 at the beginning of this week, and now I'm at $5,200. How can you recover from that mentally? You will feel that this is the end of my world. How can I trade anymore? So you need to pay attention to these psychological factors. And your psychology will come under a lot of pressure if you are using large stops and you get a bad week, you're 3, 4, 5, 6 trades that are losing in a row. So that is why I always, guys, try to keep the 2% to 3% stop levels. So 10-15 sounds reasonable to me. And what about the limit? Of course, 1109 will not be an attractive limit, so I'm going to use, of course, the next resistance, 1164. Now we have ourselves 2 orders on the euro. Okay, but before I continue talking about these orders, I just want to go back to the point that I was just talking about. I hope you guys realized why that 2 positions on the same currency pair have 2 different stop levels and limits, because of course I care most about the stop. You can have the same limit, it's okay, but what I care about is the stop. You cannot, if you buy at 1037 and you place a stop at 109.93, that is a stop of 1% of my account. That is very, very small, and even if this stop is hit, I will not blink. 1%, I can make that easily in one trade in half an hour. Okay, but if I lost 10 or 12%, of course I'm gonna feel weak, I'm gonna feel defeated, I'm gonna feel like I don't know what to do anymore. I lost 10% of my account on one trade, 12%, 15%. Some people even let one trade take more than that out of their account, which is, of course, something extremely risky to do and can destroy your account. So I have two positions on the euro with different entry points dictate different stops, because I don't want my stop to reach 10% or something like that. I want it to be 2 to 3%. And my own personal trading, sometimes I push it toward the 5%, but it's not all the time. Most of the time it's 2 to 3%. And if I really have to, I push it towards 5%, but I never let any trade take more than that out of my account. If I'm wrong and I pay 5% of my account, 3% of my account, 2% of my account, that's okay. But if I'm wrong and I pay 15% of my account on one trade, that is going to be extremely harmful to my account and to my psychology and to my confidence as a trader. So I hope you understand why we have different stop levels for these two entry orders. Okay, guys. So for now, there's nothing to do on the euro. We are trying to test this support. I know what some people are going to say. Well, you said that we have a small support at 63. Why can't we sell if the price starts trading below 63? Well, of course you can. But in this case, you will be positioning yourself against the direction of the main trend. How do we know the direction of the main trend? For the short term, this is how, guys. Low, higher low, higher low, high, higher high, higher high. And we can use, of course, indicators. And forget about all of these indicators. What I care about is the moving average. We are trading above the moving average. We are finding support around the moving average, like here and here. And currently we are above the moving average. That is why we know we are in an uptrend. Higher highs, higher lows, above moving average and above the rising trend line. Very simple techniques, guys, to know what is the direction of the market, what is the main trend. For this chart in front of you, the main trend is obviously to the upside, above moving average, above the trend lines, and stopping at retracement levels. That's another technique that I use to know or to try to guess what is the direction of the market. To me, this is an easy call. We are stopping very close to the Fibonacci levels here and here. And when you see that start happening, let me just adjust this to the 50%. When you see this happening, going up, going down in threes, especially, look at this 3, it's very obvious. And look at this 3, it's very obvious. So we are seeing threes to the downside, bottoms at Fibonacci levels, bottoms at trend lines, trading above moving averages. 4 technical tools that are all pointing to the upside. So that is why we are considering the euro to be in an uptrend. And that is why, even if we start trading below 1063, I don't want to be on the short side. I know if we start trading below 63, we might drop to the 30s or 20s. And to some people, these 20 pips are really attractive. Not to me, guys, not to me. I have learned the hard way, doing a lot of mistakes in my earlier years, that positioning yourself against the trend to get 20 or 25 pips is something that can harm you in 2 ways. The first way, it can make you, of course, hit your stop because the trend is up. It can accelerate at any time and your stop is hit. Well, you may say to yourself, well, okay, My stop is hit, no big deal. I'll place a stop on 30 pips or something like that. 1% of my account. I'm not risking more than that on this position. Okay, that's good and sound risk management. But the other way that this can hurt you with is that you are missing out when the trend is accelerating. When the trend decides to move full force with full speed, you will be in a position that is against the direction of the trend. It's not only a stop that is hit, it is also the chance to make money when the trend is really moving, that you are going to miss this chance. So it is two things that you should avoid. Hitting your stop when you're trading against the trend, and of course missing the good chance of making money with the trend. So that is why, yeah, I have said that 63 is a support, but I do not want to short if we start trading here in the 50s and say to myself, well, from 50s to 30s, that is 20 pips. I want these 20 pips. For me personally, guys, I don't want these 20 pips. I want you to always position yourself in the direction of the trend. And as we are speaking, as you can see, after reaching this support around 63, we reached 64 actually, 1 pip above it, and now we are back to 70. Okay, so we started just while we are talking, the euro is moving to the upside. These 5 or 6 pips are hopefully the beginning of a much larger move. So our orders are there. Our orders are ready to go long on the euro dollar, because we still believe that the euro dollar is going to reach even higher than it did. We have a 1 month high so far, but that's not the end. I really hope that it is not the end and that we are going to continue moving higher, testing 1164 in the near future. It's a very important resistance in my system, and I really hope we test it very soon. We still have around 38 hours till the close of this week, or maybe early next week. So with this, guys, we will take our first break for the day. Please get yourself something to drink. Think about what you want me to analyze. When I come back, I'm going to answer any questions that you may have, any requests to analyze any instrument. So if you do have any requests, please shoot. Let me analyze the market for you. Of course, complimentary and free of charge, because of the sponsorship of our generous sponsor, QTime FX. So guys, for the time being, we'll take a break of 5 to 6 minutes, something like that, and I will be very happy to come back and continue this with you, starting with your chat, with your questions, comments, and then we'll continue to another instrument. We have talked about the euro dollar so far in details. I wanted to show you the technical point of view in details, and I hope I did. We'll continue talking about other instruments when we come back. For now, a big thank you to QTime FX for this sponsorship. They are the reason why we are meeting here, guys, and they are the reason why this knowledge, these analysis sessions and trading strategy sessions are happening. It is all because QTime FX cares about your knowledge and wants you to make profit in this market. So come open an account with us, get yourself a $500 in free bonus, and of course the spreads are extremely attractive with 0 commission. Contact us at fx_edicast via Telegram, and let's open this real account for you. So let's take a 5, guys. See you in just a little bit. Welcome back, everybody. If you just joined us, thank you very much for joining us. It's an honor for me to be with everyone, with all of you guys, my fellow traders. You know, we are a team here and we're trying to make some money in this market. I really hope that you find this helpful in your effort to achieve profit in the market. Okay, before I continue analyzing the market and move from the euro to something else, I just want to read some of your comments. Aaron, I'm very happy for your profit, buddy. 382 points, that's 38 pips. That is great, man. Georgios, yes, you can go back to yesterday's video and you can see where we bought the euro in the 50s and it got to the 80s, so that was a good move. Thank you, Aaron, for your very kind words. Borania, thank you very much. That is fantastic. Congratulations on the profit, YouTube, buddy. Good day, Oliver. Harry, thank you, buddy. Another winner with us. Somebody who made money on the euro. Thank you very, very much for that. Thank you very much, buddy. Okay, so this is only the beginning, guys. This is only the beginning. Hopefully we're going to do this every day, and we're going to make money on most of the days. Nobody can make money on every day, I cannot promise you this, but we're going to make money most of the days. If you follow technical analysis and if you keep your control over your losses, you will make it in this market. You will be among the selected few that make money in this market. You know, everybody knows that around 80% of people lose money in this market, and only 20% get away with not losing. And out of these 20%, not everybody makes money. Some among this group, some people are, you know, they are making just a little bit of profit, or maybe breaking even or something like that, but at least they're not losing like the 80%. And maybe 10%, something like that, of the traders make money in this market time after time, month after month, and that shows you that this is not a very easy thing to do. And it's not because of the analysis. You know, the analysis is, of course, it's a field that you need to master. You need to read a lot. You need to go to training courses, to webinars, to every source of information that you can lay your hands on. Books, of course, reading books is very, very important if you are trying to make it in this business. But there is also the psychological factors, the emotional factors, the hesitation, the when you don't know what to do. These things, you know, they don't have a lot of relation to analysis. Analysis can help you most of the time, but also you need to have psychological and emotional control over your trading. And that is what I always say. Analysis is good, but it's not the only thing we need. Now let's go back to the market, because something exciting is happening. We are about to trigger our buy euro order. We are only a pip or something away from it, so I think it's going to hit any minute now. As you can see, we found support around the 63 and we started moving higher. That's why we have an order to buy here, and I hope I hope the market will move while we are still together. You know, I don't want this to happen after. Yes, we are in. We are in. And when we are in, guys, this is, of course, we placed 2 orders earlier. Maybe I did not say this before the break, but I'm going to say it now. When you have 2 orders to enter in the market, one entry limit and one entry stop, when one of them is hit, in order to keep the risk to a minimum, you are preferred, of course you can keep it, but what I personally prefer is to delete the other order. So now we're long euro at 83. And I really hope that before this webinar is over, we are going to be in the profit zone. Good luck, everybody. Now let's move to something else. What about the yen? What about the yen? We were talking about the yen yesterday. The yen is obviously it was in an uptrend, but unfortunately in the past 24 hours, not a lot of movement. We were long, but we closed it, I think, let me see what happened to it, with almost exactly where we opened the trade. So what is going to happen right now to the yen? Let me go to a smaller time frames. I can also use my favorite analysis platform. And we can add indicators. The reading of these indicators are good. As you can see, the RSI is changing direction very close to the 50% level, as you can see. This is usually a bullish sign. Stochastics, of course, we're not overbought or oversold here, but the lines are pointing to the upside, and the fast is crossing above the slow, so that is also another sign of an uptrend. The MACD is not giving us any clear signal yet. If the MACD itself crosses the signal line in the next few hours, that will be good for a long position. And the most important thing is we are trading above, we are finding support around the moving average area. This is very important, and it encourages us to reestablish our long position. Maybe I close it, you know, without studying the market, to start with you on a fresh day from 0 trades and build our trades for the day. I did not close it because anything on the chart told me to close it. So here we can see that the bullish preference is still in control. In my own opinion, all we need to see is to start trading above these very close levels. Here we have an intraday high of 83, and here an intraday high of 84.5. That's, let's call it 85. At 85 we buy. So I'm going to place an order to buy at 85, 108.85. That is, I think that is, yes. Now let's think about the limit and stop. We can cheat from yesterday. We had a stop at 108.05 and the limit at 1070. But let's analyze the market. Of course, yesterday's numbers are for yesterday. They may continue to be important today, and they may not. That's why we have to look at the chart before we decide if it is a good idea to use the same stop and limit as yesterday, or if we need new ones. So this is the hourly chart. Let me switch to the 4-hour chart. I want this triangle to be broken to the upside so bad. I really want this pair to go higher. And again, yesterday we did this, and we are doing this apparently today. We're going to be long on the euro dollar and long on the dollar yen. To some people that may not make a lot of sense. Why would the euro rise against the dollar and at the same time the dollar rise against the yen? There's nothing wrong with that at all. You know, if the dollar is strong against the euro, that may be because of some reasons that affect all majors, or maybe it is because of some reasons that affect only this pair, and they have no control, no influence on other pairs. So it depends. It's not always, if the euro goes, if the dollar goes up against the euro, then the dollar must go up against the yen. No, it's not like that. So it's okay to find yourself in a dollar long position on one pair and a dollar short position on another pair. It all depends on the charts. You know, we are technical analysts, we are chartists, and we refer to the chart to make decisions. And this chart tells me that once we start trading above these very, very close, we are talking about only 5 or 6 pips to the upside. If we start trading above this falling trend line from Tuesday's high, then we should establish a long position. The stop, let's see, where is our stop? This looks like a good trend line. The angle is almost 45 degrees, which is the angle that a lot of researchers said that it is best. You should try to draw your trend line that it's not too steep, not too flat, and that leaves us, of course, with 45 degrees as the preferred slope of trend line. And that is why this trend line is expected to provide support around 60. But 60 is very, very close. I don't believe in placing stops this close. Some people do, and that's good for them. To each their own. To me, no. I think it's arrogant to think that I can place a stop at 20 pips. That means you think that you are so good in analyzing the market that the market cannot even go 15 pips plus spread against your expectations before it moves in the direction that you are expecting. If that's good for you, good for you. But to me, I don't do it like that. I need a more reasonable level to place my stop at. So even if we start trading below this trend line, I'm not going to close my position. I want to place my stop at a different level. Retracement levels can be used here, and usually they are extremely helpful. Let me just delete this and use it again. Yes. Now, also, yeah, I don't want to have my stop very close, and I don't want it to be very far. So I want something reasonable, something in the middle. It's not only about analysis, guys. It's also about risk management. And I want you to master that. I want you to have the sense to know when a trade is good for you from a risk management point of view, not from a technical analysis point of view, and when it is not good for you from a risk management point of view. You cannot just analyze the market and place your stop and limit at any number that the chart tells you. If the chart gives you a stop that will make you lose 10% of your account, 15% of your account, of course you should look for a closer stop. And this is what we are trying to do here. We don't want to be very close or very far when we place our stop loss level. So right below this trend line, I don't think so. Okay, but if I wait a lot also to below the 50% level, for example, that will make it a huge stop. I don't want to have that. My limit is at 108.85. So I want something maybe in the 50 pip range, something like that. And one of the ways that I use is using the previous touch on the trend line as a support. Not the trend line itself. If I want to make my stop loss a little bit further, I place it below the touch, the latest touch on the trend line. This trend line, the touch is at 108.12. Okay? So I place what 10 pips below that. I think that would be actually, it's just a little bit more than I was hoping for, but it's still within the accepted range. So I'll place my stop at 108.02, especially that the pip value for this pair is around $9 per contract, not 10 like the euro. So it's okay to have a stop that is, instead of 50 to 60, 70 to 80. That's okay. What else? What else? We need a limit. We need a limit. If we break this, what looks like a small triangle here, if we break it to the upside, the one thing that I fear is that triangles are the patterns, at least in Elliott wave analysis, they are the patterns that appear before the final move in the direction of the trend. So if this is a trend, we may count 1, 2, 3. For example, this should be 1. This would be a strange thing to place the top of wave 1 here, but you never know. 1, 2, 3, 4, and 5. Yeah, this is wave 3. This can be wave 3. 1, 2, 3, and this is what I fear. This can be wave 4, and that leaves us with what? Not a lot of potential for profit. Of course, if the triangle is broken to the upside, the market will be expected to move higher, but not that much. We're not talking about 200 pips or something like that here. We're talking about a limited target. Jaco is joining us. Hello, buddy. Thank you for being here. Thank you, everybody. Please let me know what instrument do you want me to see analyze, okay? This is my question to you, and I would really appreciate your answers. Okay, what else do you want me to do? We have done the euro so far, and we are already in the market. And now we are analyzing the yen, and we have a standing order waiting to be hit. And what's next is something that I'm going to leave to you. So let me know what is it that you want to see next. Okay, buddy. Sorry about that, guys. Okay, the euro is now getting into the profit zone. Of course, we're talking about $8 on a 2-lot position. That's nothing. That's not even a pip. But we are getting into the profit zone. Let's hope for the best. Let's hope that this is only the beginning, and that we will continue. As you can see, euro is attempting, it is trying to move higher, and after reaching yet another 1 month high, which is only pips above the high seen, or the 2 highs seen in the past 24 hours, only pips here. So we have been failing around this area a lot now. So now it is do or die for the euro. We don't want to fail a third time around this area. As you can see, I think it's very obvious to see. We are finding support in the 60s, and we are finding resistance in the 80s. And in such situations, we want to see the price break into one direction or the other before we have confidence in our expectations. So if we don't break the 80s, that is going to be a problem for our long position. But of course, we have a stop, and it is there waiting. If anything happens against our expectation, we will be stopped out. We'll keep our risk to a minimum to 2% or 3% of the account, while hoping for the best and looking forward to achieving a good profit. But from where I stand right now, we really need to break the 80s. The sooner the better. And that's number one. Number two, we need to keep trading above the 60s or in the 60s. And I don't want to see the price go below the 60s. Even if we drop to the 60s, it's okay, but not below that. Okay, guys. Let's go back to the yen, and let us try to find ourselves a reasonable limit. If I go to the daily chart, let me clean this mess. All right. Now 9:30, we said this yesterday, 9:32 to be exact, looks like an interesting resistance. Let me show you why. First of all, of course, it is August 1st high. It is the highest price in the past 4 months. Okay, 109.32. And for the 4 months from June until now, we have not traded above this. And what is even more important is that it is extremely close to this Fibonacci level, extremely close. Okay, so this Fibonacci level is at 36, 37, and the high that we are talking about is at 32. So that gives you an indication that the 930s is a resistance that we need to care about. So what if we place our limit at this Fibonacci level? Let's see how would that work. What do you think about that, guys? 109.37. That leaves us with what? 54 pips of profit. Of course, sometimes in day trading this happens. It's not the ideal thing, not the thing that we really like to see happening, but sometimes it does, where the stop is equal or maybe sometimes even more than the limit. Of course, this is not the ideal thing to have. We don't like to do that much, but sometimes we have to. So 109.37 from 108.85, that is 52 pips. That is good. That's a good limit. But in case you are looking for more, I think I'm going to show you a secret retracement level that I use that can be sometimes extremely effective, and that is the 1013. It is my own level, and as you can see, up there, up towards 1013, we have resistance at 109.70 and another one that's very close to it at 109.94. So we can see that there is one resistance after the other between 109.30s and 1013. Let me just go back to my mind and use Fibonacci instead of other retracement levels. So to me, I really want to see it push above this one, but I'm not sure if it's going to be explosive or very strong to the upside. I have my doubts. It's an opportunity to go get on the long side, but I don't know, 1013. What do you think about that, guys? Should I place it at 1013 or at 970? I'm going to take my chances and place it at 1013. But in case, this is what I want you to do. If you are following this signal, later on, of course, we're not going to talk about this until 24 hours later in Friday's webinar. But what I really want you to do right now is, if you are using this, signal, the buy on the yen at 108.85, and the price moves to the 930s and it looks weak, it's not able to break above the 30s, it starts falling to the 20s, to 2015, something like that. There is a number of things that you can do. Actually, there are two things that you can do. One of them is to close there if you see that the price is not able of breaking the 930s, then that's it. Close your position. You will be in a profit of about 50 pips by then, and that will be fantastic. But if you want to take your chances, what I really want you to do is to move your stop from this one, stop on a loss, to a small stop, profit stop. 108.85. How about 109 for a stop at 15 pips? So if I reach the 30s, either I close my position with 50 pips of profit, or if I want to take more chances and aim for the stars for the 1013, what I do is I move my stop from 108.02 to 109. Okay, and that is, of course, if you are following this signal. Okay, so we are done here. We are already in on the euro. Very small profit, a pip, something like that, of profit. We are still not moving. I really hope we do. I really hope we do. And I want to see this happen before the end of today's webinar, guys. It's very exciting to share these moves with you. So, we have our position on the euro. We have our order ready on the yen. What else do you want me to analyze? I'm going to pick gold. Gold. Okay. I'm going to pick gold, guys. And let's start with a daily chart. Yesterday, remember when we talked about gold yesterday, we said that it's buyable around 84, I think. It was at 84 when we were talking about it. And as you can see, we are around 60 pips above that price at the moment. So it did move to the upside. Of course, that was expected, but not without a drop, because first it dropped to the 70s and then boom to the 90s. So what is expected right now? Yesterday's analysis was not bad at all, but we did not initiate a position because we already had positions on the dollar Canadian and the euro dollar and the dollar yen. So I said enough is enough. 3 is enough. Now, as you can see, the precious metal is trying to recover. It is trying. It has been trying. This is a 4-hour chart. So the last 6 candles, that is the last 24 hours, it is, or 20 hours, it is trying to recover. Why 20 hours? Why did I say 20, not 24? Because we just opened this. So what we're talking about in this recovery is 20 hours. And I was in the market when this low was reached. It was at around just a little bit before 8:30 a.m. Eastern time, and that is not 24 hours ago, that's around 20 hours ago. Okay, so what is happening right now? We are trying to recover, but we are still below the moving average and below this falling trend line. Here's your moving average. Just look at this, guys, and tell me if you see any sign of something that is expected to go higher. You know, finding resistance at a moving average right here with a long upper shadow, 2 weakness signs, testing the moving average band and then falling, another weakness sign, testing the moving average and then falling, testing the moving average. Now, if you believe that history repeats itself, which is the most important thing in technical analysis, because if history did not repeat, what are we trying to do here? It makes 0 sense. But if you believe that history repeats itself, then what? Then what you should believe is that because we failed here at the moving average and got a drop again here and again here, if we fail at the moving average again, that should be followed by a drop, right? Okay, so that added to this trend line gives me resistance. Okay, gives me resistance, and you can see the accuracy of the simple moving average 49. It is almost exactly at the trend line. So it is really the border line between the downtrend and the uptrend. Of course, in my career, I have used many moving averages, and at the end, I prefer now to use the 35 to 49 band. And as you can see, the 49 is doing an amazing job here. So now I don't believe that the precious metal is going to move higher unless we break above 94. Let's say 94 is the resistance for now. What about the support? Well, in my own opinion, a bearish close of this hour below the open of this hour can lead to some weakness. Let's take a look at indicators. Nothing on the MACD. Here on the stochastics, we are not long or short, but the RSI, we are of course in sync here. We have reached the high on the RSI and on the price at around the same time, and again here. So we are in sync. We are making lower tops here and lower tops here. That's a weakness sign. The RSI is pointing to the downside, and that is why at the close of this hour, if this hour closes on weakness below 90, I am going to initiate a short position. That's of course in 10 minutes. Now we can use these 10 minutes to do what? To do what, guys? To determine what levels of support and resistance we need to use for this trade. First of all, we talked about the resistance. It's at 94.5 right now, or 0.4. For the next hour, it's going to drop 2 or 3 pips and so on. So let's call it, starting for the next hour, it's going to be at 94.3. 94.3 plus what 40 pips, let's say, and plus the spread, that leaves us with 98.5. So my stop is 98.5. I want to sell here, and my stop is going to be something around 90 pips. Of course, we are talking about a volatile instrument. We cannot expect to trade the precious metal with a stop of 30 pips. That makes absolutely no sense to me. Maybe some people do that, good for them, I wish them the best, but to me that will not work because it's a very volatile instrument. It can move 30 pips in 1 minute. So placing your stops very close is, in my own opinion, is equally bad to placing them very far. If you place them very close, they're going to hit often. And even if you keep that at 2% of your account, but too many stops at 2% will harm your account. The same thing is true if you keep your stops very far. If one stop can cost you 12 or 15% of your account, then all you need is a couple of bad trades and your account is ruined and slashed in half after 3 trades, 4 trades, something like that. That you cannot do that to yourself. Why would you want to do that to yourself? So for this specific situation, I'm using a stop that is around 90 pips, and that's okay. In such situations, some traders prefer to use a smaller trading size. Up until now, in these 2 days, we have been trading 2 lots. Maybe if you think that gold is extremely risky, maybe you can trade 1.5 lots instead of 2 lots. Okay, so it's completely up to you. For me, I like to use the same size of trading all the time, but of course, when you need to change the size of your lot, you need to lower it in order to keep your risk under control. That is a good practice. That is highly recommended, and that is something that you can do, of course, if you sell gold here. So I am going to sell gold when this hour closes if this candle keeps on giving me this weakness sign. Now my stop, as I told you, it's going to be above 94. We can do with 98, 98 and a half. In that area we can place our stop, but not 95 or 96. I would not recommend that. Okay, now what about the limit? Well, the limit, as you can see, we have been touching this trend line and then rising fast. And I please just see how fast we rose yesterday. Just take a look here, from 77 to 91 in 1 hour, 140 pips in 1 hour. So that is why if we come very close to this trend line with a short position, it might be a good idea to close that position and then wait to see. If the price breaks below it, then we should re-establish our short position. But if the price does not break below this trend line, then selling from here and closing just above this trend line or very close to this trend line makes a lot of sense. When I try to find a horizontal support that is very close to this trend line, I cannot help but fall in love with this low, 87.4. Let's call it 78.4. I'm sorry about that. Let's call it 79. Okay, so we sell here at the close of the hour with a limit of 100 pips and a stop of 85, 90 pips, something like that. And we wait and hope for the best. Well, guys, I think that gold is getting weaker and weaker, and I want to get in. Okay, I really want to get in. Go. So here we are, 88.93. This is the market price that I got. My stop is 1498 point. Without point, let's keep it at 98. And my profit level is 14. Let's place it at exactly 100 pips. Okay, 78.93. That is exactly 100 pips. And let's hope for the best. As you can see, guys, are you seeing what is happening? 100 pips in $100 in no time at all. It was obvious that this thing is going lower. I did not even want to wait until the close of the hour. And I hope that with enough experience, you'll be able to spot these things, these opportunities, and even better opportunities than this one. So now we have two trades, and we still have room for one more. The gold is doing great. I really hope we're going to see a better profit before the end of this seminar or webinar, sorry. Okay, guys. Well, what else do you want me to take a look at? And I will. Now, what I really want to see is a good hourly close on gold before we take our second break. I don't want to take the break right now. I want to wait for a couple of minutes until the close of this hour. But up until now, let's go back to the chart. Up until now, as you can see, this thing is going exactly as expected. And now we are breaking below the moving average, which is good because we found support. This is a 15-minute chart. We found support here at the moving average, and now we are trading below the moving average, which is a weakness sign. What do I need to see in order to believe more and more in my position? Look for any trend line, any retracement, any moving average that is providing support. And if we break below it, then that would be good for us. For example, this, of course, this is not the main trend line. The main trend line is the one on the 4-hour chart that we were just talking about, this one. But this is a minor trend line. Nevertheless, it's going to be helpful if we find support around this trend line. That's not very good for us. But if we start trading below this trend line, then we relax and have more confidence in our short position. And this is what I am hoping for. I want to see this hour close below this trend line, and at the same time I'm going to compare the shape of the candles on the hourly chart. And as you can see, this candle is about to engulf the bodies of two previous green candles, and that is a beautiful weakness sign. So what is happening to gold right now? It is getting weaker. Why is it getting weaker? Why are we making $200 in no time? Because we use technical analysis, simple technical analysis. And while we were talking, our order to buy dollar yen is now triggered. So we have short on gold, a long on dollar yen, and a long on the euro. The long on the euro, to tell you the truth, is not the one that I was hoping for. You know, I told you that we placed two orders, one at a low price in the 30s and the other up in the 80s. And of course, I wanted the one in the 30s to hit, but you know, this is a market we cannot control. The one in the 80s is the one that got hit, and let's hope for the best. So let's take a look. The hourly close is bearish if you compare it to the previous two green candles, and it's just below this trend line. I really wanted to see it considerably below this trend line, and actually below the low of this candle in specific, 87. I want the price to trade below 87. Of course, we are only 8 pips above that at the moment. I need gold to fall below this level in order to have more confidence in my short position. So with this, guys, we reach our next or our second our second break for the day. As you can see, this is weakness sign. Two candles are moving to the upside, and then one engulfs the bodies of these two candles. Now we'll see what happened until the end of the break. I'm going to take a break of 5 minutes. Enjoy your break, guys. Think about what is it that you want me to analyze, and I will sure come back to talk about the market. When we do end our break, I will be talking about more currencies, more options for you to trade. For the time being, another thank you to QTime FX for the sponsorship of this event. Show them some love, guys, and get your 500 withdrawable bonus. Did you hear that? Withdrawable bonus of $500. Not just a trading credit, it is a withdrawable bonus. Okay, come join us, open an account through FX Educast so we can continue providing you with these trading and analysis sessions and trading strategies every day, and use the unbelievable spreads offered here with zero commission. So it's a great offer. Use it and abuse it. So come open your account with us, and of course we're going to be together all the time, trading, analyzing the market, talking about trading strategies with our beloved clients. Thank you everybody for being here. It's a 5 minute of a break, and then I will be back to analyze more market action with you. Okay, guys, welcome back. How's everybody? If you ask me, how are you, Munther? I will tell you, well, you have to wait for our signals for today. If they do good, I will be a very happy man. If they don't, I will not be that happy. So, of course, we have 3 trades right now, and we are hoping for the best. The price is still around these levels. You know, we have 6 lots. Gold is almost exactly where we opened it. The euro has retreated 7 pips, 6 pips, 7 pips. So we are around the levels where we opened these trades. Now, Ram Heinz, 50 pips, buddy. Fantastic. Congratulations. And I always hope that you will be here with us and enjoy these signals every day. Okay, guys. Now let's move to our next market. Yesterday we talked about the Australian dollar and the New Zealand dollar and the Canadian dollar as well. So I want to go back to the Australian and New Zealand dollars. They were showing signs of weakness yesterday, and let's see what happened in the past 24 hours. I do not know, to tell you the truth. I have not checked the price because I did not have a position on these instruments. And as you can see, let's see, where is the 24 hours ago? What's this? Oh. Yep. We were around this area, I think, when we talked about them. I'm not sure about that. Yeah, around here. And the price moved a little bit to as expected, and then it moved higher. We did not have an open position on these instruments, but right now it might be the time to do so. I don't want to have too many positions, but first look at this instrument shows me that we are testing the same level of resistance again, and let's see how does that look. Start with the hourly chart. Yes, we are obviously facing resistance just above 63. It has been the case for a few days now. First thing you want to do is you want to identify the closest support or resistance level. In this case, the closest level is a resistance. And this resistance is, we are currently testing this resistance between, let's say 63.15 and 63.21. Of course, this is the New Zealand dollar, so it's not the kind of instrument that moves 200 pips a day. And that's why the levels are usually close to each other, not very far from each other. The stops are smaller, the limits are smaller. And that's why you see a resistance at 15 or 14, and the next resistance as 21. This is a resistance area which is made of 2 levels. We need to treat it as one area. What else can we do? Of course, for this whole move to the downside, regardless of the wave count, this is what I have learned through the years. A lot of people connect wave count with retracement levels, and that may be a good idea, but regardless of the wave count, we can use retracement tools to identify support and resistance. Guys, this retracement level is one of my trading secrets, is 71.4. I didn't want to talk about it, but since we are analyzing the market live, I think I have to. So what is happening here? What is happening is that this retracement level, 71.4, is obviously keeping the market down. And that is why the 21, it's exactly at 21. Exactly. Look at this accuracy. Look at this. So let's get rid of this and this and focus on this. So this is the level that can be really helpful in today's trading. If we continue to keep trading below this level, that is a weakness sign. If we break above it, that is a sign of strength. And I'm gonna let the market decide. How do I do that? Well, I draw a trend line for this recovery attempt, and I want to wait for the price to break one or the other. So if we break above 21, 63.21, I'm a buyer. If we break above, currently it is around 90, let's call it 90. If we break below 90, then I am a seller. And as you can see, between the support and resistance, we have 31 pips, very close to each other, not like in gold when you can find 100 pips between the immediate support and immediate resistance. So what are we going to do here is something different. We are going to wait for a break. On the euro, when we placed two orders, you remember, we placed them in the same direction. We wanted to be euro long. If the euro gave us a good and a better price to get in, that's fantastic. But even if it didn't, we wanted to be in on the long side of the market because we think that the euro is going to move higher either way. If it drops to the 30s or without a drop to the 30s, the expectations and the analysis of the current situation is that the euro is going to move higher. Now, here it is different with the New Zealand dollar because we will let the market decide the direction. Okay, we don't have enough evidence to point that we should be long no matter what, or we should be short no matter what. No, here I think that there's an interesting resistance at 63.21 and an interesting support at 62.90. And I will let the market do the decision, okay? Who's making the decision on this pair? The market. If it breaks above 21, I'm in on a long position. If it breaks below 90, I'm in on a short position. And let me show you how you do this. You do this. Where is the New Zealand dollar? You do this by placing two orders in opposite directions. A buy and a sell, and of course both of them are going to be stop orders. Why is that? Because we want to buy if the price breaks to the upside, we want to sell if the price breaks to the downside. So the type of order is in both cases a stop entry. Two lots, yeah, it's okay, two lots. Why is it okay to have two lots more? Because this is a relatively calm instrument. It's not very volatile. And our stop is expected to be less than these stops for the other trades. It's going to be less than that. So if we break above 63.21, I want to be in on the long side. And in such instruments, 5 pips are enough. So 63.26, okay? Now my stop is going to be below the rising trend line, and this rising trend line in the next hour is going to be at 89.90. In a couple of hours it's going to be 91, something like that. I'm going to use the high of this candle. Let me just think about it for a minute. What is the, to me 92 looks like a good level to consider the trend line to be at. Of course, in the next few hours, every hour or so, it's going to go up a pip or something like that, not a lot. And that is why I'm going to use 92. Just take 5 pips, 87. So as you can see, The stop is 39 pips. That's very, very small. Now, what about a limit? Let's see. If we break above this, I really believe that reaching higher above the previous top is extremely possible. And it's going to be a huge probability of trading above this high, or at least test this high. Come very close to it, test it, push, trying to push above it. That is what I expect is going to happen if we break 63.21. So this high is what, 63.54. As you can see, the limit is not very large and the stop is not very large. So what I can do is I can look at the next resistance just above here. I say to myself, well, what is the resistance that is just above here? And I think that, let me show you this one and tell me if you like it. We want something above here, so we have here. It's only a few pips above it. As you can see, we have lows here. We found support here, 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 and here. Look at this one, beautiful. Here, very close to it. Here, it's a resistance. So it is obvious that we have a resistance at 63.63. What do you think about that, guys? It's still very, very close, you know. But it's okay. It's okay. It's an instrument that does not move much. So 63.63. Now, what I need to do is I need to place another order. And this order now is going to be extremely different. It's going to be a sell order, not another buy order like what we did with the euro. It's going to be a short order. And when do I need to sell? When do I want to sell? I want to sell, of course, if the price breaks below this rising trend line. If we do break below this rising trend line, then it is time to sell. And we agreed to consider this trend line at 92. Actually, we need a couple of hours for it to reach 92, but this is the level I am going with. And I want to see the price below 92. I said that only 5 pips for such slow instruments are enough. So I'm sure you have noticed by now that, sorry. I need to open a new order. It's a sell stop, of course. I'm sure you have noticed by now that we are using the same numbers. And we place it. What about the stop? The stop is, of course, above 21, and with such small instruments that move slowly without a lot of volatility, 5 pips are enough. So 5 pips above 21 is 26. Are you getting what I'm trying to show you? The entry for this order is the stop for this order, and the entry for this order is the stop for this order. So it is what we call a stop and reverse, SAR. We are long above 21. If we drop below 92, we stop our long and we reverse to the other side. Okay, guys? So we have a stop and reverse. We have all the information we need. We still have one thing, the limit for the sell. If the price breaks to the downside, then it should be expected to trade below this previous bottom. That's one of the simplest way to place or identify a target. This low is 38, and in my own opinion, that's good enough. That's good enough for me. 62.38 is good enough. That is 49 pips. That's it. So now I also have a standing order on the New Zealand dollar, and I really hope it does hit before we say goodbye today. We still have half an hour. I want to take a look at the Australian dollar, an instrument that we were interested in yesterday. Please let me know if you have anything on your mind. I know what I'm going to analyze, but I'm not going to trade it, okay, guys? I'm going to, the last part of this webinar, I'm going to analyze the pound, but I'm not gonna trade it, the cable, the pound against the dollar. I'm not gonna trade it because, you know, we are in the middle of this Brexit thing that makes it, you know, hard to trade. Not only hard, it's risky. Of course, you can specify resistance, support in any situation, but you also have to show respect to the important news that are coming into the market. Being a technical analyst, I love technical analysis, I really do. But I cannot ignore things like central bank meetings, for example, or Brexit. You can't say, yeah, I'm a great technical analyst, I don't need to follow the news. I love technical analysis, of course I do, and I'm a radical technical analyst. Most of the time, I don't even know what is on the agenda. But when it's really major, you have to pay attention. Brexit, central bank meetings, anything that is this huge, elections, presidential elections, something like that, you cannot just ignore that and focus only on the chart. I love the chart, but you need to keep an eye on everything. So after we talk a little bit about the Aussie, we're going to talk about the cable, but we're not going to trade it. I prefer not to touch it. You know, these things are different from one trader to another. To me, when I see that something is getting really risky, I try to avoid it at all costs. I don't want nothing to do with it. Yeah, there's potential. Yeah, great. Okay, enjoy that potential. I don't want it. It reminds me like a few weeks ago when we had the drone strike on Saudi oil facilities. I was trading oil every day before that. But when the market closed at 54 and it opened above 61, I just stopped touching oil for a while. I felt that this market is going crazy. This is too much risk for me. I don't want this kind of risk. After a gap of 678 pips, if I remember correctly, that was the biggest gap that I have seen in my career in 19 years of trading, and it just scared me straight. I don't want to touch this thing. I don't want to be a part of oil trading, although I was trading it almost every day before that, and I was making money and I was happy with it. Most of the time, most of my trades were successful. Of course, from time to time you're going to lose one here, another there, but overall I was very happy with trading oil. I was making more profit than the losses I am suffering, and it was a good total. But I got scared. I left this whole thing to its own, and that is how risk and emotions can affect a trader's decisions. It's not only a chart. There's a chart. There is your mentality. There's your emotions and emotional factors that are trying to affect you, and so on. So that is why I am not touching the pound today. I'm going to analyze it, but I'm not going to trade it. So the Aussie is moving to the upside. To tell you the truth, I do not remember the levels we specified as important yesterday. So let's start from scratch. First of all, the first thing that you notice is that we had a very good looking trend line, and this line is broken to the upside. You can see that the drop, that we are touching some important points here and here, and here we had attempts to break above it, but were unsuccessful until this storm came. And this is probably some news that came from Australia overnight that caused this kind of move. Okay, so we're moving to the upside, and we think that this move is now, this move is now trying to reach as high as the 88.6. Obvious resistance in this area. You can see this high here, here just a little bit above it, and even the top itself is not, of course, very far from the 88.6, especially on such an instrument. So in my own opinion, we have a resistance on at exactly 68 figure, exactly 68. So this is the first thing that we note. What about the support? This looks very attractive to sell, honestly, from the first look. But the first look is not enough. You need to investigate more. Having a top very close to 68 is a reason to sell. The current daily high is 67.96. That is only 4 pips below our resistance. So that by itself is a reason to go short. But let's investigate more. Sorry about this. Let me use this. Okay. All right. So it is 68, of course, the resistance is 68. The support is not as easy to spot here. Why? Because the move to the upside is rather sharp. And if we draw a trend line, of course we can draw a trend line in this situation. I hope it does not look extremely sharp. To me, this is, no, it's okay. It's okay. I thought that it's going to be sharper than that, but it is a little bit sharper than I want it to be. I want, for example, my trend line to look some more like this. Okay, but can we count on it? Not really. So we need to look for other ways to find support and resistance in this area. Of course, the previous bottoms and tops are always candidates for support and resistance, always. So the first support that we need to care about is this European session low, which is 72. And honestly, although I do not like this trend line very much because it is a little bit sharper than what I want it to be, I still can't count on it because it is extremely close to 72. Now 72 is this session low, and at the same time, it is close to the trend line. So at the current hour, the trend line is exactly at 72. In the next hour or so, and of course it's going to go up 1-2 pips every hour. So we can say that we have resistance at 68 and a support at 72, and whichever breaks first, I think that we can follow that move. Okay, if we break the 68 to the upside with 10 pips, let's say 10 pips in each case, 68.10, that is an indication that the market is going to continue moving higher, and we can get in on the long side of the market there. Or at 67.62, we can sell, we can short the market. And there we go. It's the same situation as it is with its neighbor, the New Zealand dollar. You will have to build a trading strategy just like this one, using the 68.10 and 67.62. Now, to me, of course, I like this analysis. I like it very much, but I already have 3 positions in the market and a standing order. So that is the max that I can do for today. I don't want to overtrade, you know. And so, although I believe that this is a good analysis, I will not place another order. I have enough positions and a standing order, and that's the max that I want to trade for the day. This is always something you should consider. Even if you find great trading opportunities, if you find the opportunity that you have been looking for a week or two or something like that, and it appears on the chart while you have a good number of positions or standing orders with none of them having its stop loss in the profit zone, my advice to you is let it go. Okay, let it slip. Don't follow it. I don't want you to trade 6 or 7 pairs or 8 pairs or something like that. Some people do that, and it can make your account look like a mess. Okay, and you cannot concentrate on your trades anymore. You have 6 pairs or 7 pairs that you need to follow: news, analysis, resistance, support, trend lines, Fibonacci levels. That can drive you crazy. Not to mention the kind of risk that you will be getting yourself into. What if? Always ask yourself, what if? What's the worst case scenario that can happen to me? If I have 3 open positions, each of them with a stop of 2%, the worst thing that can happen to my account is a loss of 6%. But if I have 7 positions, each of them with a stop of 3%, then the worst thing that can happen to my account is a loss of 21%. We don't want that kind of risk. Okay, so that is the only reason why I choose to avoid trading the Aussie dollar today, because from a technical analysis point of view, a break above 68 is a reason to buy. A break below 72 is a reason to sell. And if you do not have enough trades on your account right now, you can follow that. You can follow that and get in the market according to these levels on a break of one of these 2 levels. But if you do have positions in the market, no, just focus on the positions that you have. Wait for them to reach into the profit. Move your stop from the loss zone to the profit zone if things develop in the way you want them to be developing in. And then when you have your stop at profit, that is when you can start thinking of another position, but not before that. So, with this being said, now we are trying to test, or we are actually testing, the 68 resistance, and a break above this level should be viewed as a reason to go long. Now our euro position is moving in the right direction, unlike our gold position. Unfortunately, one is going, a few minutes ago, gold was in profit and the euro was in loss. Now things have changed. And the overall, as you can see, the overall profit or loss, we are still almost exactly where we were. We are achieving marginal profit. We cannot say that this is profit. We're having 6 lots, $40 or $50, that's not a lot of profit. So let's hope that the euro keeps moving higher. Yeah, now we're talking. The euro is making around 140, 150. Keep pushing, buddy. Keep pushing. Great. Okay, so the last thing that I want to analyze today is the pound. For the sake of analysis, I'm not going to touch it. Okay, guys, I am not going to touch it. And, you know, just by looking at this, I expect, even this is the first second that I look at the chart of the pound, of the cable, for a while. And with the first second, I expect the price to go higher. Can you tell me why? With the second, I can make this prediction. Can you tell me why? Well, as you see, guys, we are finding support at the moving average. And each time after finding support near the moving average, we are moving to the upside, as you can see. Now we found support near the moving average, and the price started moving higher. Let me adjust my cam a little bit. A part of my head is missing. So uh, I wanted to see this almost bald head in its entirety. So you guys, let me just adjust it a little bit like this. Yeah, I think that's good. Okay, so guys, when we find support at a moving average areas, then that is an indication of an uptrend still going. And of course, we don't need to discuss if this is an uptrend or not. We were trading around 22 about a week ago, and now we are trading at 28. So the pound is exploding. It is exploding. And of course, this is because of the Brexit thing. News coming. To tell you the truth, I'm not following this news. I don't know what is going on with the Brexit, because I don't want to be involved in such a volatile and scary instrument at the time when it can do anything with a sentence said by any official. I don't want to trade that way. But when I look at the charts, if you want to forget all about that, guys, finding support at moving averages, this is a positive sign. Let's start drawing trend lines. This is your support. Okay, it is 27.30. As you can see, this is why I don't like to trade these things when they are in these phases, these scary phases. Why? Because the support that I have just found is almost 100 pips away from the current price. 100 pips. So if you want to buy here, for example, and you want to place your stop, you need to place your stop below this trend line, which is already 100 pips away. And of course, it's a volatile instrument at the moment because of Brexit. It is more volatile than usual. That means you need to hide your stop below this trend line with a larger number of pips than usual. So instead of 20 pips below this trend line, you may need 50. So if I get in on a long position here, I will need 150 pips of stop. Does that make sense to you? That is more than I want to take when I'm talking about risk and stop levels. That is not the kind of risk I want to handle. So that is why I avoid trading these instruments. Now let's look to the upside of this chart. And obviously, it is it's very tempting to buy, to tell you the truth, with the bottom and the moving average are breaking above the falling trend line. This is more than attractive when you are looking for a position in the market. And just with a few pips above 28.10, maybe at 20, that was good to buy. 25, something like that. We are only pips above that, so it is now justified, unfortunately, to buy this instrument. And I say unfortunately because I don't want to trade it, but I see opportunity. Yet my risk appetite does not want to handle that much risk. Let's take a look at our positions. As you can see, we are in a profit of about 120 pips overall, or $120. I hope to make 120 pips, but for now it's only $120. Not a lot of profit compared to the size of the trades we are taking. We need to see more than that. We need to see the multiples of that, and I really hope by tomorrow morning that we will. Our positions are doing great. Now, one thing before we continue talking about the pound, because one of the two orders on the New Zealand dollar is done, we need to cancel the other, because I don't want two positions, okay, on the same currency. I delete my order, and now I have 4 open positions achieving marginal profit to marginal loss, moving around the same area where they were opened. Overall, of course, some of them are doing good, like the euro. Some of them are not doing very good, like the in New Zealand dollar, which did hit our entry level and started falling. That of course can happen. We're talking about only what, 7 pips or 8 pips. That's nothing. So we need to give these trades time, and of course tomorrow morning we're going to talk about them, and I'm going to keep them up on the screen for you to see what happens to them. Now let's continue talking about the pound, the last part of today's webinar. So a break above this falling trend line is number 2 strength sign after of course finding support very close to the moving average. Now this is the hourly chart. It is definitely pointing higher with a large stop. This is the only thing that is bothering about this setup, is that we do not have a modest stop, a reasonable stop. We have a large stop, 150 pips. If you buy here, you cannot place your stop above 27. You cannot do that, and that is frustrating because you need to place it at 26 something, and that will leave you with a huge stop. So I don't want to trade it. But let's take a look at the analysis itself, regardless of trading. Now, what should we expect for this thing on the longer run? This is the daily chart. And sorry about that, guys. As you can see, if we draw a trend line falling from the 2018 annual high, we are now trading above that trend line. Does this remind you of something? Well, of course it does. What are you doing, Munther? We are talking about the pound. Why are you shifting to the euro? Well, let me show you. The same thing is happening on 2 charts. Okay, we are breaking trend lines that have been frustrating these pairs for at least a number of months. In the case of the euro, it's 4 months. In the case of the pound, it's more than a year. And as you can see, in both cases, we are now breaking above these trend lines. That means that the European currencies are now attacking the dollar as a team. Okay, and the euro, of course, is the head, the pound is right behind it, and with these two, the most important currencies in Europe, attacking the dollar like this, breaking above falling trend lines, then I think that the dollar is not going to have good times in the near future. So this is expected to go on. The euro is expected to go on. The pound is expected to go on. And that will leave the dollar in a defensive position, under attack by European currencies. Let's see. That's good. That is good. So after breaking this trend line and closing above it yesterday, this is a daily chart. So this is yesterday's candle. This has happened only on Tuesday, just a couple of days ago. Yesterday we opened and closed above this trend line, which is a strength sign. And now we are face to face with the long-term Fibonacci level at 2845. So 2845 is now an important resistance. If we fail to break it, that may change things. things right now are good for the pound. Of course, you can see that you don't need me to tell you that. You can just take a look at this and you see what kind of gains the pound is doing these days. And if we fail to break 28.45, then that would be a weakness sign. I don't expect weakness signs to appear here, to tell you the truth, but you cannot disrespect a Fibonacci level. You should always respect Fibonacci levels. So you need, if I'm not going to trade this, but if I was going to trade this, even if I'm long here, I would keep both my eyes on the price, waiting, praying, hoping for a break above 28.45. And if I don't get this break, I will be worried all the time, ready to close my positions if things start to deteriorate. And the only thing that will make me relax and smile is a break above 28.45. But on the longer run, a break above this trend line is not supposed to achieve only this kind of movement above it. I really believe that the target should be much, much larger than only a move of from what, 27 to 28.50 or something like that. I really believe we can do 30s from current levels, and the first sign that we are going to 30 and beyond is a break above 28.45. So keep your eyes, guys, on 28.45. It's the resistance that you need to watch if you are trading the pound. We are now 30 pips below it, around 30 pips below it. But during the day, you need to keep your eye on this resistance if you are planning to trade this thing. And later on, as I told you, a break above this trend line should result in a retracement for the whole move, if not a new trend to the upside. That's the least that you should expect, that this move will reach one of the key retracement levels for the long term. And as you can see, the 50 and the 61, let me just focus on these two. The 50% level is in the 3160s, 64, here's the price, and the 61 is at 34.52. So you see why I said that there's a huge possibility of reaching 30 from current levels, of course, because of the break above this trend line and the distance between current prices and key retracement levels for the long term. So 28.45 is your resistance for the day. What about the support? I think we talked about it. You can draw more than one trend line, of course. Some of them are going to be closer to price actions than others. To me, this is of course 27.30, something like that. This is an hourly chart, so with every hour this trend line is going to go higher, going to go up a few pips until it reaches this level, this 27.48. I think it is the support that we need to watch for the rest of the day. So 28.45 your resistance, 27.48 your support. And as you can see, we have 97 pips between support and resistance. So if you go back to the New Zealand dollar chart, you would see that what we had 31 pips or something like that between the support and resistance. Here we have almost 100 pips. This is the difference in volatility between currency pairs. But no trading on the pound today. Of course, no trading on the pound. I prefer to focus on my 4 trades and take a look at them, guys, because these are the trades. These are my recommendations for today. We have a long euro position from 83. Stop is at 10.15. Limit is at 11.64. We have a short position on gold from around 14.89. My limit is around 14.79, and my stop loss is 14.98. Well, for the dollar yen, I still believe that the dollar yen can push higher than it is trading right now. I believed in that yesterday. We opened and closed the position almost in the same area, almost the same level, with almost no profit or loss. But I really believe that it can push beyond that. You know, the dollar yen has potential. The chart is bullish and promising. So we got in at 108.85. Our stop is 108.02, and with time we should move that a little bit higher. Okay, especially if we start to achieve profit. Especially remember we talked about that resistance in the 109.30s. If we reach the 109.30s, you have two options. Either you close your position there, or you move your stop to the profit zone. If you want to wait for 1013, it's okay, it's possible, we can get there. But when we are halfway there, or we are moving towards that target, and we reach an important resistance like 109.37, then it is a wise idea to move your stop from the loss zone to the profit zone. Just a little bit of profit, 10 pips or something like that. At 109, let's say at 109. So what I'm going to do is I'm going to follow this, and if the price moves to the upside, if the price of the dollar yen moves higher and I'm in good profit, I'm going to move my stop to 109 and keep it. Of course, I believe in 1013, but in case I'm wrong, I don't want to go back to the loss. So I want to get out with a small profit. And finally, the order that we placed last was by New Zealand dollar at 63.26 with a stop at 62.87. As you can see, we're talking about 39 pips of stop. That is nothing, you know, compared to other instruments. And of course, the limit is also very small. It is at 63.60, 37 pips of profit. So there you go, guys. These are our trades for the day. Let me show you the results so far. Some of them are doing very well. Like the buy euro, we are around $140. The sell gold is just a little bit in profit, but the yen is still in loss and the New Zealand dollar is still in loss. Overall, we are very close to breaking even. A little bit of profit, a little bit of loss, flipping between this side and the other. It's been a pleasure, guys. It is always a pleasure to talk to you about the market, to read your comments, to find fellow traders that are really interested in the market as much as I am, and to talk to them about trading. And it's always exciting to give you what I believe is the best trades for the day. Of course, we have 4 trades right now, opened, waiting and hoping for profit. And I really hope, yesterday we made very small profit, $190. Today, I really hope that we can do better than that with the open positions that we have. When we come back tomorrow, if the trades by then, if they hit the stop or limit, that's okay. If they don't, we'll close everything and start over again on the next day. Until then, I want to wish you the best. I want you to keep your eyes on the market, enjoy every move there, and as I always finish, good trading and good luck. Don't forget that this event is sponsored by QTime FX, our favorite forex broker. Open an account with QTime FX and get $500 free bonus, withdrawable bonus. Okay, guys, our spreads, I'm sure if you have tried different trading platforms, you know that 0.4 is a fantastic spread, and we are offering you this kind of spread on the euro dollar, on the dollar yen, with 0 commission. Okay, so contact us at fx_educast via Telegram, and let's open an account for you where you can trade these recommendations that I'm going to give you every day and we are going to enjoy making some profit together. Thank you very much for being here, and see you again in 21 hours for tomorrow, the last day of the week, the last day of this week-long event. We're going to meet for 3 hours like every day from 6 a.m. GMT until 9 a.m. See you then, guys. Good trading and good luck. Bye bye.